Cathie Wood just won these two industries. Hey guys, welcome back to my channel. In today's video, I'll be sharing with you what Cathie Wood just predicted. Right now, we are living in an era where there are not only a lot of ideas, but also the technology to make these ideas come to life. So the combination of these two factors, ideas and technology, have created a lot of innovation and at the same time disruption. And Cathie Wood predicted that with these ideas and technology, disruption will be coming into these two industries. To be fair, with the ideas and the technology to back these ideas, we are seeing disruption across the board. So it is not only these two industries which will experience disruption, but these are the two industries which Cathie Wood believe that are likely to be the most affected by innovation. We'll be watching a short clip next about Cathie Wood talking about the two industries which are likely to be the most affected by these innovations.
So we're going to see a lot of that in financial services, energy. So the two sectors that have done best this year, we believe, are two of the most vulnerable sectors. In the energy space, again, up 40% year to date. We think that electric vehicles, and especially autonomous electric vehicles as they launch within the next few years, are going to put a big dent in oil demand. And within financial services, we see digital wallets evolving so much faster than I think anyone could have dreamed. China showed us the way through WeChat Pay and Alipay, and now Square's Cash App and Venmo are moving so quickly that their user base has scaled well beyond JP Morgan's customer base in just a few years, in the last 5 years, whereas JP Morgan got to this level one acquisition at the time. The digital wallet evolution or revolution has gone viral, and there's a social networking element to it. So very interesting space. And so financial services buyers, beware.
As we have heard from Cathie Wood just now, the two industries which she believes are going to be the most affected by these innovations are the industries which are performing the best in the stock market year to date in 2021. And it's not just Cathie Wood who believes that these industries are going to be most affected by this disruption. In fact, as we are going to see in just a moment's time, companies in these industries are also aware and have even articulated these problems that they face by the disruption caused by these innovations. So let's take a look at some examples and numbers and figures to understand the disruption that are coming to these two industries, the energy industry and the financial industry. The CEO of JP Morgan, Dimon, shared this letter to shareholders in late 2020. While he touched on many points in his letter, I would like to highlight a few points. He mentions that to fairly assess the competitive landscape for banks, you must fairly evaluate their strengths and weaknesses to deal with both the current competition and evolving competition. Then he talks about the strengths that banks possess, and I'd like to expand on their flaws right now. He mentions that banks have flaws of their own making, usually due to bureaucracy, complacency, and a lack of deep competitive spirit. Banks also have other weaknesses, born somewhat out of their success. For example, inflexible legacy systems that need to be moved to the cloud if they are to remain competitive. Banks are also required to deal with extensive regulations which can hinder new competition and or create an opening for both existing and evolving competitors. And on the point of competitors, he mentions that banks are facing extensive competition from Silicon Valley, both in the form of fintechs and big tech companies such as Amazon, Apple, Facebook, Google, and now Walmart. And he also believes that the competitors are here to stay. And even Dimon, as a CEO of JP Morgan, admitted that as a result, banks are playing an increasingly smaller role in the financial system. Dimon even gives some numbers and figures to back up his claim. So if we take a look over here, he mentions that US banks and European banks have become much smaller in size relative to multiple measures, ranging from shadow banks to fintech competitors and to markets in general. He provided a market capitalization of banks, both the US banks and European banks. For the US banks, their market capitalization in 2000 was a combine of 1.2 trillion US dollars. In 2010, that number increased to 1.3 trillion, and in 2020, that number increased to 2.2 trillion US dollars. The European banks fared worse. Their combined market capitalization was $1.1 trillion. In 2010, it was $1.5 trillion. And in 2020, it was $1.1 $1 trillion. So over these 2 decades, or 20 years, the market capitalization for US banks did increase. But for European banks, they remain the same. But as you guys know, if you have been following this channel for a while, numbers by themselves do not mean anything. We always have to compare these numbers against something else. If we take a look at the total US GDP market size, in 2000, it was $13.3 trillion. In 2010, it was $15.8 trillion. And in 2020, it was $18.8 trillion. So even though the US banks' market capitalization as a percentage of the total US GDP did increase over the years, the size of shadow banks and evolving competitors, such as tech companies, are growing at a faster rate than these US banks. For these evolving competitors, in 2000, the market capitalization for these companies are either not applicable or not material. But fast forward to 2020, these competitors make up more than 1/3 of the total US GDP. Right, so even Jamie Dimon, the CEO of JP Morgan, acknowledged that banks are losing a foothold in the financial system, especially to tech companies. And this ties back to what Cathie Wood just predicted. She predicted that the financial industry is one of 2 industries that are going to be affected the most by these innovations. The second industry which Cathie Wood predicted that is going to face huge disruption by innovation is the energy industry. While these oil companies have definitely taken action to diversify their business in recent years and have even invested in renewable energy, Cathie Wood believed that it is not enough. These old and established energy companies are going to experience disruption caused by renewable energy companies. We see that in this headline, despite COVID-19 pandemic, more than 260 gigawatt of renewable energy capacity was added globally in 2020, beating previous record by almost 50%. In fact, studies by the International Renewable Energy Agency shows that the renewable energy shares of all new generating capacity rose considerably for the second year in a row. More than 80% of all new electricity capacity added last year was renewable, with solar and wind accounting for 91% of all new renewables. On top of that, renewables' rising share of the total is partly attributed to net decommissioning of fossil fuel power generation in Europe, North America, and for the first time across Eurasia. Total fossil fuel additions fell to 60 gigawatts in 2020 from 64 gigawatts the previous year, highlighting a continued downward trend of fossil fuel expansion. So the energy industry is the second industry which Cathie Wood believes that is going to experience huge disruption brought by innovation. So what are your thoughts on Cathie Wood's prediction? Do you think these industries are going to face macro headwinds, or do you believe that these industries will continue to prosper? Let me know down in the comments below. With that, to your financial success.